This is Carl with the three things I'm watching for Friday, October 31st. Happy Halloween if you celebrate. Want to dive into the Chinese trade deal that came out almost exactly when I hit send on this video yesterday. But the deal came out, and bottom line is, I'm sure we've seen the headlines by now. 12 million metric tons of Chinese soybeans the rest of this year, 25 million metric tons per year the next 3 years, and then a massive amount of sorghum and 19 million metric tons of soybeans to other Asian buyers. No timeline set on those. So bottom line, about 87 million metric tons of soybean commitments from now until January or 2028. Um, there's some questions on these numbers. First of all, I want to break them down. They're good. And Secretary of Defense said that these are going to be minimums, that there could be more soybeans. This is going to keep our with the soybean imports into China. Really, bottom line, this gets us back to where we were before the trade war. This really isn't much of a gain on where we had, but it's at least China's back to the table. You got to look at moving forward. This puts us at about a 24% market share into China's soybean trade. That's about where we've been. So bottom line is we agreed to go back to where we were. It's this agreement was geared much more towards the tech side, chips more than anything, rare earths. But the bottom line is soybeans did benefit. Corn and wheat, not much there. Anything else other than the sorghum. And that put a little bit of pressure on the market. Also, overnight reports out of Brazil that now that we have the China deal, and yesterday there was some cash market indications between basis and freight that China or someone, I should say, was likely buying or showing interest in U.S. soybeans. The reports out of Brazil, though, is with China after their announcement, Brazil soybean values have fallen to the point where they're more affordable. And bottom line is you have non-Chinese buyers going back to Brazil already. So we're gonna have to keep an eye on that because that demand has actually been above where it was the last few years. So a lot of moving parts in that soy complex. I think today we're going to see a lot of consolidation, collective trade, gather our thoughts, and then get through first notice day, month end, and come back in and probably really start to seeing these incorporated in a trade next week, maybe a little bit more. Second thing I'm watching today, the U.S. economy. We got the interest rate cut here on Wednesday. There's, a lot of indicators and economists saying that everything's going good, but boy, you look at it and you have to say maybe not quite so much. General Motors, GM cutting 1,700 jobs, and these aren't layoffs; these are gone. The media giant Paramount cutting 2,000 positions, and one of the big ones, Amazon, slashing 14,000 jobs this week. Those are not coming back. Those are replaced with AI. AI is starting to make a statement in the U.S. labor force, and as we see AI grow, we're going to see more of this. The labor market starting to become a major concern, especially in that red meat market. So this is gonna be a factor not just for today, but for moving forward. Third and final thing, I want to wrap it up quick for everybody. Monday margins change, and they all get cut 5 cents. So the new daily margin or the margin on corn is going to be 35. What is 35? It's going to go to 30 cents. Soybeans will drop to 70 cents a bushel, and wheat 35 cents a bushel is where we will be. We will expansion will be 1.5 times them on expanded limits. So those are the new ones. And as a reminder, set your clocks back this weekend. We get to gain an hour of sleep. There you go. Those are the three things I'm watching today.